Hello guys, Vulcan Trader here, and today it's story time with Papa Vulcan. Today we're reading probably one of the best, if not the best, stock market trading books of all time. And my section has my favorite quote of any stock trading quote in it, and it's Reminiscences of a Stock Operator by Edwin Lefebvre, which is a biography. Loose biography. Everyone believes it's a biography, but we don't know it for certain, or something like that. But on Jesse Livermore. And Jesse Livermore, this is a picture of him right here. So he was a big stock trader in the late 18, early 1900s. And he made $100 million shorting the market I guess at the top of the market in 1929, right before the Great Depression, which is a huge amount of money, maybe equivalent to somewhere between $1 billion to $10 billion today, I'm going to guess, but pretty amazing. But at the end of his life, he ended up being broke and killed himself, actually, but that's another story for another day. But you can gain the whole world and lose your soul, like it says in the Bible. So don't do that, and maybe I'll do another episode on that in the future, but it's a separate lesson. So, but nonetheless, still a ton to be learned from him in kind of the mindset and psychology of being a trader, and tons of great lessons in this. So, without further ado, here's our story for today. Okay, so most, let us call them customers, are alike. You find very few who can truthfully say that Wall Street doesn't owe them money. In Fullerton's, there was the usual crowd, all grades. Well, there was one old chap who was not like the others. To begin with, he was a much older man. Another thing was that he never volunteered advice and never bragged of his winnings. He was a great hand for listening very attentively to the others. He did not seem very keen to get tips. That is, he never asked the talkers what they'd heard or what they knew. Tip is just when someone tells you, about certain stock or that they think is going to go up, whatever. But when someone gave him one, he always thanked the tipster very politely. Sometimes he thanked the tipster again when the tip turned out okay. But if it went wrong, he never whined, so that nobody could tell whether he followed it or let it slide by. It was a legend of the office that the old jigger was rich and could swing quite a line. But he wasn't donating much to the firm in the way of commissions. At least not that anyone could see. His name was Partridge. But they nicknamed him Turkey behind his back because he was so thick-chested and had a habit of strutting about the various rooms with the point of his chin resting on his breast. The customers, who are all eager to be shoved and forced into doing things so as to lay the blame for failure on others, used to go to old Partridge and tell him what some friend of an insider had advised them to do in a certain stock. They would tell him what they had not done with the tip so that he would tell them what they ought to do. But whether the tip they had was to buy or sell, the old chap's answer was always the same. The customer would finish the tale of his perplexity, then ask, "What do you think I ought to do?" Old Turkey would cock his head to one side, contemplate his fellow customer with a fatherly smile, and finally he would say very impressively, "It's a bull market." Time and again I heard him say, "Well, this is a bull market, as though he were giving you a priceless talisman wrapped up in $1 million accident insurance policy. And of course, I did not get his meaning. One day, a fellow named Elmer Harwood rushed into the office, wrote out an order, and gave it to the clerk. Then he rushed over to where Mr. Partridge was listening politely to John Fanning's story of the time he overheard Keene give an order to one of his brokers. And all that John made was a measly 3 points on 100 shares, and of course the stock had to go up 24 points in 3 days right after John sold out. It was at least the fourth time that John had told him that tale of woe, but old Turkey was smiling as sympathetically as if it was the first time he heard it. Well, Elmer made for the old man, and without a word of apology to John Fanning, told Turkey, "Mr. Partridge, I've just sold my Climax Motors. My people say the market is entitled to a reaction, and that I'll be able to buy it back cheaper. So you'd better do likewise. That is, if you've still got yours." Elmer looked suspiciously at the man to whom he had given the original tip to buy. The amateur or gratuitous tipster always thinks he owes the receiver of his tip body and soul, even before he knows how the tip is going to turn out. "Yes, Mr. Harwood, I still have it, of course, said Turkey gratefully. It was nice of Elmer to think of the old chap. Well, now's the time to take your profit and get in again on the next dip, said Elmer, as if he had just made out the deposit slip for the old man. Failing to perceive enthusiastic gratitude in the beneficiary's face, Elmer went on, I've just sold every share I owned. From his voice and manner, you would have conservatively estimated it at 10,000 shares. But Mr. Partridge shook his head regretfully and whined, No, I can't do that. What? Yelled Elmer. I simply can't, said Mr. Partridge. He was in great trouble. Didn't I give you the tip to buy it? You did, Mr. Harwood, and I'm very grateful to you. Indeed I am, sir. But, hold on, let me talk. And didn't that stock go up 7 points in 10 days? Didn't it? It did, and I'm much obliged to you, my dear boy. But I couldn't think of selling that stock. You couldn't? Asked Elmer, beginning to look doubtful himself. It is a habit with most tip givers to be tip takers. No, I couldn't. Why not? And Elmer drew near. Why, this is a bull market, the old fellow said, as though he had given a long and detailed explanation. That's all right, said Elmer, looking angry because of his disappointment. I know this is a bull market as well as you do, but you'd better slip them that stock of yours and buy it back on the reaction. Reaction's a pullback, if you didn't know. You might as well reduce the cost to yourself. My dear boy, said old Partridge in great distress. My dear boy, if I sold that stock now, I'd lose my position, and then where would I be? Elmer Harwood threw up his hands, shook his head, and walked over to me to get sympathy. Can you beat it? He asked me in a stage whisper. I ask you one. I didn't say anything, so he went on. I give him a tip on Climax Motors. He buys 500 shares. He got 7 points profit, and I advise him to get out and buy them back on the reaction that's overdue even now. And what does he say when I tell him? He says that if he sells, he'll lose his job. What do you know about that? I beg your pardon. Mr. Harwood, I didn't say I'd lose my job. Cut in, old turkey. I said I'd lose my position. And when you're as old as I am and you've been through many booms and panics as I have, you'll know that to lose your position is something nobody can afford. Not even John D. Rockefeller. I hope the stock reacts and that you'll be able to repurchase your line at a substantial concession, sir. But I, myself, can only trade in accordance with the experience of many years. I paid a high price for it, and I don't feel like throwing away a second tuition fee. But I'm as much obliged to you as if I had the money in the bank. It's a bull market, you know. And he strutted away, leaving Elmer dazed. What old Mr. Partridge said did not mean much to me until I began to think about my own numerous failures to make as much money as I ought to when I was so right on the general market. The more I studied, the more I realized how wise that old chap was. He had evidently suffered from the same defect in his young days and knew his own human weaknesses. He would not lay himself open to a temptation that experience had taught him was hard to resist and had always proved expensive to him, as it was to me. I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling the other customers, well, you know, this is a bull market, he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. That is, not in reading the tape, but in sizing up the entire market and its trend. And right here, let me say one thing. And this is the big, awesome quote at the end here. This is my favorite quote. After spending many years in Wall Street, and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It was always my sitting tight. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operated stock operator has firmly grasped this, that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason that's the big good quote there, that little section. So the reason is that a man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street, who are not at all in the sucker class, not even in third grade, nevertheless lose money. The market does not beat them, they beat themselves. Because though they have brains, they cannot sit tight. Old Turkey was dead right in doing and saying what he did. He had not only the courage of his convictions, but the intelligent patience to sit tight. So, anyway, yeah, I love that story. But it's kind of like, let's see, the same thing applies whether you're a day trader, swing trader, position trader, investor. What Warren Buffett says is the market is a mechanism to take money from the impatient to the patient. And yeah, that's basically how it works. And so, but let's give some examples of where this applies and why this matters. And actually, I'd even say this is why I don't like scalping or day trading, and I'll explain why. Not that you can't make money doing it, but that the big money is made in either swing trading, position trading, or long-term investing. So let's look at a chart here, and we're going to apply this. But let's say, let's do Bitcoin. Let's say, okay, say you're right on Bitcoin somewhere in here. It doesn't really matter where you bought it. Say you bought it at 6, you bought it at 10 or 11, and then it ran up to 20 or let's say it ran up to 17, and then you're like, oh yeah, it's gonna react. I'm gonna buy it on a pullback. It drops, I don't know, to 16. I mean, are you really gonna buy it there? Maybe you're gonna think it's gonna drop down to 14 from 20 because it hit the all-time high right here, and then it doesn't go down that far back even to the 50-day moving average. Stays above it the whole time, rides all the way up to 64,000 before ever really having a good pullback. Well, I guess you had this one from 40 to 30, but the point is, at any point in here, if you would have had to, it doesn't really even matter, anywhere from this run after this crash from 6,000 all the way to 30 or 40,000. If you were to try and sell and buy a pullback, I mean, you're reducing your cost basis very, very, very little. I have very small pullbacks right here, right here, right here. The only real big one is right here after it hit 40,000. And are you really going to be able to know that was the point to sell after that far up, after you'd made 4 times your money? I mean, you might want to sell out at 2 times your money, but then it went even further than that. And so, and then the whole time you're going to, people think, well, I guess if you worked a normal job, so like going from a normal job where you have to go in, you put in so many hours, and you work so much, and that effort is equated to so much money. The stock market doesn't work that way at all. A lot of it is sitting there doing nothing, almost being lazy to a certain degree. So I became a full-time trader investor beginning this year, and I would tell people that's what I'm doing now, and then so they, think that I'm like sitting here at the market open every day, making trades, or they assume you're a day trader. I guess for whatever reason, day traders have so they're, it's kind of like being a, some sort of celebrity or a rock star or a race car driver. I don't know why it is that people are so enamored with day traders. Not that day trading is bad. I'm just saying that it's, in my mind, it's a lot more effort for not any more reward, and then you spend tons of time on a screen when you could be spending time with your family or whatever. Swing trading, position trading, or investing is more efficient. But anyway, so let's say I was trying to day trade, I don't know, Bitcoin anywhere here. So I'm gonna, even if I was buying it, holding it overnight, let's say I even caught this move, I bought it at 19, and then it shot up to here, and I put in my whole account into it with leverage, and and so I made whatever this is, I don't know, some percentage. But anyway, and then I sold out at the end of the day because day traders usually go flat. And the next day it does another move the same size, and then if you waited another week, it keeps going. It never really pulled back, and then you'd have missed this whole move right here. Whereas if you're just either an investor or a position trader, or really an investor at this point, because it's a long-term move, you're going from March didn't really crash until I mean, if you had held it for an entire year, some point would have been the time to sell out, at least if you were going to do it. I still think we're in a bull market and going to rebound and go to, above 100,000 by the end of the year. And so that's why I still am the majority of mine. But so yeah, the big money is made in sitting tight. So if you're trying to day trade it, even say you scalped some of this and some of that and some of that, are you really going to get that entire move? Probably not whenever you have these type of parabolic runs like this, where we did the same thing. Like I bought, same time I bought some Riot about here, I added to it here, but then what if, Riot went up to $20, what if I would have sold it, And then I would have missed this run all the way to 70, and then I can't remember, I sold out some of it here and started rotating to other things. But even so, I think it may have bottomed out at this point, if Bitcoin has, and then when it runs again, if it follows Bitcoin, it's going to go even higher. And so following the general long-term trend or bull market, even holding through some of these pullbacks. But if you sell at the wrong time, too early, so if you sold anywhere in here, say you bought, you were good, you were early, you bought, you sold here, you say you even bought at $3, you sold at 12 net or something, which is a good, I don't know, whatever it is, 300% profit, then you lost this entire move up here. It's hard to time the top and know how far it's going to go. And then sometimes it might even be better to not even try and, even if you have to pull through go through a big drawdown, if it's something that you still got the fundamentals behind it, that it's still going to grow for many years to come. Yeah, it's going to have parabolic runs and big drops in the meantime, but most of my stuff that I've made good money on, I held for a long time, and it had growth, it was flying parabolic, but then I had some fundamentals that gave me conviction to hold on to it long term, even through the pullbacks, and Bitcoin being the biggest one. But that's kind of why this is so important, and people that want to day trade or scalp. And it's like, if you're trying to scalp, or what if you're trying to, you're going to scalp this right here, you're going to day trade this, you buy at the open, you sell right here at 40, and then it goes to 70, 80 right here, and so you miss all that. Are you really going to be able to time and know, it's not going to go up 1, 2, 3, 4, 5 gigantic parabolic days and go up 100% in like a week, and then if you try, and then it's going to pull back down, and then you say you try to buy here, and then it craps out on you, and then goes back up here, and then drops back down again, and so we don't, and then through this whole thing, and then now watch, it'll probably go up and keep going even higher. But it's harder to time, when is it going to go sideways, when is it going to top out. You would think, maybe it's going to do it right here. It didn't, went even further. And so that's why basically being long, in a bull market, having the long-term trend at your back and knowing how to gauge that, sizing up the general market, being in the correct things, and then knowing if you're in a money printing environment or not, if the interest rates are going up or down, yada yada, and the general sentiment, how bullish or bearish people are, understanding all that, being in the general right direction, and then holding the big moves. You actually do a lot less work, and you get bigger gains for doing that. And then as your account grows, like if you have, I'm not to this point yet, but for example, Warren Buffett can't day trade, right? Because his account's so big, or anyone that's a billionaire really, because if they were to sell out in a single day, you can't, or even a week sometimes, then they would end up crashing the thing that they're in. The only way that you can survive is by moving really slowly in and out of the right things. And so day trading, you can't really, once you get into the like multi-million-dollar account size, there's a certain point where there's not enough liquidity in a day or at a certain moment in time to be able to take your orders. So if you want to still make money and be able to compound, you have to switch to longer term swing trading, position trading, or investing in order to get the compound interest growth to get you to, higher than multi-millions or, but yeah, I'm not there yet, but, maybe one day, but, one day, yeah. But yeah, that's kind of the point. If you ever wanted to be a billionaire, that's how you get there, is by taking longer term positions in the right things over a long period of time to get compound growth of the big moves. And then you're gonna have to pull through some pullbacks, or when you start to see some general weakness, maybe you sell out somewhere in here, and you're not going to catch the top, but I'm waiting for the market to turn, et cetera. So so that's go check out that book, Reminiscences of a Stock Operator. You can get it on Audible or Kindle and stuff like that, or buy it. And then this is a free PDF, the one that I was reading. Maybe I'll put that in the description. But hope you like that. Thanks. Have a good day. Learn to sit tight. Know when to have the conviction to do that, when not to, and when to be more careful. And you should not be sitting tight. But yeah, that's the lesson of the day.